Hello traders, it's Samurai Trader here. Welcome to session 98. I actually produced session 98 last week, except we had a sound issue, so I had to delete it from YouTube, and here's a second run where we will have the soundtrack on it. So in this video I'll be discussing a number of trades taken. In today's session I'm going to be trading the NQ8 tick Renko, a much higher time frame than I'd normally trade. This was suitable, and I was actually trading the New York afternoon session because I'm down under in Australia at the moment. The New York morning doesn't really suit me, and I'm not really a fan of the New York morning session because it moves that quickly. I like to sort of have a market that moves a wee bit slower, just gives me more thinking time. Now what I cover in these sessions you can apply to futures, forex, or stocks, and of course if $1,000 a day is not enough for you, you simply increase your position size, you trade more contracts. But at the same time, we never ever forget our money management rules. Now as always, I do need to pull up the disclaimer. Please feel free to pause the recording if you wish to read the disclaimer. The bottom line is, traders, don't trade with money that you can't afford to lose. And a great benefit of virtually every trading platform today is that you can trade in simulation mode until you're actually ready to go live. Now in these sessions I'll usually discuss and show you how I trade a number of different setups, that is both trend following, counter trend, reversal, range techniques. Now for a new trader that might be a little overwhelming initially. So I want you to remember the Goldilocks rule when it comes to mastering the art of day trading. This is how you really get wealthy. You want to start off with something that's just right, not too hard, not too easy, just right. Meaning I want you to focus on the trend trades. In fact, what we're going to do is look at the 5 or 6 trades I actually took, and I'll explain those setups. Then we'll go across to a chart, and I'm going to go from the right hand side and explain exactly what I'm looking for, but I'll attempt to stay focused on the trend trades because that's absolutely essential for a new trader. Now very quick advertisement, if you haven't already downloaded my ebook, please click on the description link below. As well as that, please make sure you subscribe to my channel so you can be kept up to date with all of my latest videos, and better still, become a member. Doesn't matter whether you're an experienced trader or a brand new trader just starting out, you get the works that I show you here today for $197. In other words, there's over 35 PowerPoints. I provide all of my indicators for free. If you've got a trading platform where I don't have the indicators coded for, I give you all of the settings anyway, so you can basically set up almost any an indicator, almost any platform, to replicate how I trade. As well as that, there's over 200 hours of online videos, plus I've got a special going at the moment where within the 197 you can attend 1 month of my live coaching sessions. That is, each month I run 8 live 2-hour sessions for every Tuesday and Wednesday evening, 6 p.m. to 8 p.m. Eastern Standard Time, where you get to watch and listen as I explain the trades, the setups, the psychology of trading, money management, and a whole lot more. If you're unable to attend those sessions, they are recorded and you can watch the recordings. Make no mistake, traders, this is a $10,000 plus program, all for $197. Now after the first month, should you decide to continue, you can just drop me an email and say, look, I'd love to continue with these monthly coaching sessions. $97 a month, that's all it is. So let's have a look at these setups. Now if we go over here, traders, just up here I had what we call a 3B, and most of these, and I'll have to get to the next page, I can't remember. Traders, when you're an active day trader, you forget what happened 2 days ago. Okay, so time really flies. But first of all, I am trading an 8 tick chart. So let's talk about this for a moment. Most of you know I usually trade the Globex session. That is the once the market closes at 5 p.m. Central, it reopens at 6 p.m. Sorry, it closes at 4 p.m. Central, my apologies, opens at 5 p.m. Central, and I'll trade generally a 4-tick Renko. Okay, it just plods along nicely. It's a great market to trade. The NQ is a great market, mind you. So's RTY, the Russell. Oil is great that time of day, but if you're after your real bang for your buck as far as price movement, the NQ is it. For an example, if I just move this down now and just show you, so this is Monday the 6th of May here, and this is the 4-tick Renko on the NQ. Now what we're after, and I should show, this is actually a really good lead into this. So just say if you wish to net say around $200 a day. Now $200 a day, you need a $4,000 account. Let me perhaps just quickly discuss this. This is important. By the way, this is all about getting clarity around your trading. This is the stuff, though, unfortunately most traders don't want to know about, and they wonder why they keep losing their money. This is a business, therefore you've got to understand your strategies, naturally, the market you're trading, but also understand money management. And that is, we never want to risk any more than 2%. Now on trading a $4,000 account, and of course you can trade with a micro, so I'll show you in a moment how you do that and how you build your account very quickly, starting off with only $400 or $500 depending on the market you're trading. But here we're after 200 a day, which is 5%. How do we do that? We're after ideally what I call 6-step moves, which I'll show you in a moment. Now the 6-tick is fantastic during the during the London session. Okay, so before the New York session opens, you'll get away with usually trading a 6-tick. As you get closer, you might have to jump up to an 8-tick, and it also does slightly depend on any red flag news we've got coming out. But today we're going to be mainly focused on the 8-tick. And here we're after 350, 360, which once again is your 5%. And to get there, we want to really execute only 3 or 4 great trades. Now I'm talking about net trades after any losses here, but you'll see in a moment how we identify high probability trades. So what we've also got, depending on the time frame that we're trading, well actually the setups or the different types of entries that I'm going to use, okay, well that will then dictate to us the size of the account that we need. Reason being, if we're trading like an 8-tick, and if I put my stop loss 2 ticks under a swing or above a swing high or under a swing low, it means then we're probably going to have a risk there of $130. Now if we're trading the micro to begin with, it's only going to be $13. Okay, so you can build your account, and I'll show you how to do that in a moment. But these are the critical factors that we need to clearly understand when it comes to day trading. Now what I wanted to point out here was that $200 a day on this particular market, that's 4 6-step trades a day. Now what exactly on earth is a 6-step move? Irrespective of the time frame that I trade, see how these look like steps. So I just call these steps, and depending on the time frame, they will each step will be a different dollar amount. So on a 4-tick, it's offset by 2. Each step is worth $10. Okay, so what you're after ideally is 4 net 6-step trades a day, and after commissions that's $200 a day. Now by having a target or a goal, it gives you clarity in so many areas, and you've got to have what we call lofty goals, goals that drive you. But what I wanted to show you here was, and so this is if we look at this here, this is live, okay, but I want you to notice my white paint bar, the super scalper, in the direction of the trend. Now when you've got, and an easy way of identifying the trend, is the blue cloud basically means that I'm looking for long trades. Here we're in a sideways market, and I'll show you how we handle that in a moment. If we're in a downtrend, ideally we want to see the orange cloud. These are what we call 2 and 3 B's. In other words, I've got bounces on multiple markets. So super scalper, winner, all of these are basically that one there down here, traders, would have been a loss. Okay, that would have been a beautiful winner. So here, fantastic divergence trade, and we're bouncing off the pivots. More on that very soon, because I'm going to be sharing with you, look, can I call them secrets? But they're not really secrets. All professional traders know about these, and we trade into these and use them. So I'm going to be showing you, and I want to try to keep this video to about 30 minutes or so, but I really want to share with you some incredible information that will make a massive difference. So up here, this is what I call a 3B. Now, a couple of rules on this. First of all, during the New York afternoon leading into the close, the market can be quite fast. I prefer to be using buy stops and sell stop orders. On this particular day, the market was moving that quickly. I'm using market orders, and I'm getting some slippage on my entries. Okay, so I've got a target here of 350 per car or per contract, and I'm trading 5 lots here. So up here, plain vanilla 3B. So for members watching, 3B. Okay, now you may notice here I was out of that trade there, and I was out of this one exactly break even. And here is why. I'm a scalper, meaning I'll usually work with a fixed target. So get in, get out, get paid. Now it's yes, it's a lovely dream that to trail and pick up some of the really big moves. However, that doesn't suit everyone. I prefer to get in, get out, get paid, look for the next trade. So once I hit a certain amount of steps, I'll then go to break even plus 3 ticks just to cover my commissions. Why 3? We'll quite often get on the NQ 1 or 2 ticks of slippage. So here I come down, I hit my 5 steps, went to break even, and it stopped me out, unfortunately. Up here I picked up my full 7 steps, thank you. Here I picked up, so I don't think I mentioned that, I'm after 7 steps. That's 140 per car just here. Okay, so here trend trade. Here you can see we're in a beautiful downtrend, 28 tick stop, 28 tick target. Now down here, this was actually a bit of an error, and for members watching, it was only a T19. Now it worked out mighty fine, and the reason I took it, but later on I broke one of my rules, but the reason I jumped in on this trade, this is called angulation. Can you see how price action is angling very strongly away from the 200 EMA up here? Angulation. Now this nearly always leads to a retracement. Very high probability trade, and for members it wasn't quite a T3 but very close to. So traders, we've got a setup called a T3, very high probability reversal, and you don't even have to have divergence. Now a T19 to us, as you're about to see too, I use what we call an anchor chart 1 and 2, higher time frames. I look at this way, that this entry chart here is a wave. We want to ride the waves in the direction of the tide, which is the higher time frames on my anchor chart. So that's very important. You'll be following the higher time frames. When you have double divergence or divergence on 2 or 3 time frames, it just dramatically improves the probability of your trade. Now up here, so here it worked out to be a nice trade. Then I jumped in on this 3B, and it was immediately I was stopped out. No great surprise, and the reason being, when you have a trade after a lot of angulation, okay, your first setup's much more likely to fail. So what you want to look for is when you have a very deep pullback, do you have any divergence? So I was stopped out immediately on that trade. I then had what we call a T12 up here, and this was very close to stopping me out as well. Now when I trade the the 8 tick on the NQ or higher, I like to have my stop loss 2 ticks above the swing. And here this come up and tested my high by 1 tick, so I was 1 tick saved by 1 tick. So the 2 tick above or below my swings saved me on this particular trade. Now this turned out to be, so for members watching this actually turned into a bet the farm. However, it was such a deep pullback, I decided not to take the bet the farm, but to jump in right here, a trend continuation trade called a T20-1. And thank you very much. And here we've got a T3 right here. So I was out here. I actually went for a larger target in this particular case, and the reason being was the swing low, which I'll talk about more in a moment for you. I then had a T3. I executed a market order and actually started to reverse, got a better fill, and I was out with my 7 steps up here. Thank you very much. And for members watching, you can see there that actually turned into a T10 2 candles later as well. So that was 5 wins, 1 break even, 1 loss. Okay, so that was all over. So target there at 350, 482 in 10 minutes. So this is really moving quite quickly, and that's why I use market orders. Now we can see here, yes, we could have trailed, and perhaps rather than gone for 7 steps, quite often we could have gone for 10. That will suit some traders. It's just not my cup of tea. I prefer to get in, get out. That suits me better. Now I teach traders how to do both styles, by the way. So when it comes to obtaining clarity, one of the things here is to have a lofty goal. That is to set goals that are a reach, that is, really exciting goals, but are somewhat realistic as well. Now let's just start with this first of all. Now what if you don't have $7,000? Because to trade this market correctly, okay, you're going to need, that is to using what I call the anchor chart 1 candle close, which is just if I've got a very deep pullback, we'll see if we get any in a moment, and I'll show you what I mean. You need $7,000. Now I know your broker, you can say to me that, look, my brokers tell me I only need $500 to $1,000 for a day trading margin. That is true, but you're not going to stay in business. This is a business. You've got to remember, we never risk more than 2% of our account. Now here, if you don't have 7, you start here with 700. Remember, on the micro, a micro contract is 10% of the value of the big contract. And here, instead of going for $350 a day, we're going for $35 a day. We're trading on the micro the exact same setups. Now with the micro contracts on the NQ, the MNQ, you've got massive daily volume. There are thousands of traders that are trading the micro NQ contract, but the bottom line is here, you start off with $700. You have the potential within 12 weeks to now have $8,000 in your account. Now you can start using the market's money, and we'll see what happens in a moment. You can go over and start trading the big contract. Now just so you know here, if you're new to my channel or my videos, you start off by trading 1 contract, and you only start trading 2 when you've got $1,400 in your account. You start trading 3 when you've got $2,100 in your account. Remember, we're treating this as a business. You'll hear me say time and time again, get rich slowly. Now once we move over to our $7,000 account, we're going for $360 a day, and let me get that out right, and I'll show you how to do that. Within 10 weeks there, we've got the potential of our $10,000 a week income, whatever you wish to be earning, and your capital's now 52,000. Now what about this over here, 100 contracts here, weekly income 180,000 a week? Well, you'd have to be trading during the New York hours flat out for that. Okay, to go and execute 100 contracts after hours, a Globex session, is it possible? Oh yeah, absolutely, but you'll get a lot of slippage. trading 10, no problems, 10 lots at all. But getting up to this sort of volume, you're going to be looking at trading during the New York hours anyway. So you can see just there where we are realistically in 10 weeks. Now, total time taken, we started off with 700. We went initially for 36 a day. Okay, within 12 weeks we now roll over and start trading the big contract. That's taken us only 22 weeks to have a full-time trading career. I do have to say though, we need to allow a couple of months on the simulator before you even go to trading the live account, even the micro. There's only one way to master the art of day trading, and it's the right way the first time. Now we're going to have a look at the charts themselves, and I want to walk you through from the right hand side exactly what I'm looking for. You see, it's easy to go back and for me now to show you, oh look, I had one here where you can see here the executed trades anyway, but I want to show you exactly what you need to be learning to do. Now the bottom line is we're really ideally here after this. Okay, I'm really after 3 7-step trades a day ideally, or 4 5-step trades a day. Now remember, our target is 350 a day, so you'll see what, and I'll explain those in a moment. That's net after any losses. Now of course you can go for larger targets. It's just what I recommend as a scalper. Now as we're about to go to the charts, here's also a couple of critical factors that we need to take in account. We need to know, and you may not, this may be a foreign language to you right now. This is not rocket science. It's just a matter of learning the lingo and exactly what each tool, which is what they are, how they work, and the really what's behind it. That is, what's the philosophy, how do we use them. So pivot levels, the current day's pivot levels, the prior day's open, high, low and close levels, the 89 and 200 EMAs especially, your intraday swing highs and lows, and your current days, particularly high and low. All of these become price magnets, but also major support resistance levels. So let's go and have a look at this, traders. So we're going to start from the right hand side. So what I've got here is an 8-tick Renko. Now you can trade these strategies on tick charts, on time-based charts, on volume, it doesn't matter. I've been now trading 28 years, and I've now found that Renko is probably the easiest and smoothest chart to trade. It just makes life so much easier. With that being said, if you've been trading with tick charts for years and years, of course you're going to say, no, I prefer tick charts, because you are correct. Tick charts will give you more information. However, you'll find that Renko can really smooth things out, and for newer traders especially, it's really just ideal for them. The other thing here is with the NQ, you'll see my white paper, that's my super scalper. Okay, I prefer that to always plot, or nearly probably 95% of my trades on the NQ. I want to see the super scalper, and the reason being the NQ, I used to call it the nasty Nas because it can be very choppy. I've reframed that to the nifty NASDAQ. However, it can still be a bit of a devil at times. So here we go, starting here. So we're breaking out of consolidation. Now how do I identify consolidation when I've got a flat 89 and 200 EMA? So up we go. Okay, now up here, by the way, see that there we've got a little bit of that's called angulation. If ever you're going to consider a reversal trade or a divergence trade, that's what you want to see. You want to see some angulation. I've got a little bit of divergence, nothing to really write home about. So I'm not really, look, just here, this is what I call a 21B. Look, if I was to take that, look, I'm just going to sit this out for a minute. Okay, now just here, now if I had have taken that trade, that was only good for 3 steps, and it looks like I've got a little reversal just here. Now for the experienced traders, that are here, remember I said to wait for the super scalper. This is what I call a rule of one entry. I had a rule of one entry there. If you've got a fantastic entry off a trending EMA, yes, you can get in and scalp the crap out of it. Okay, there are times when I prefer to be using the super scalper, particularly for all new traders, but experienced traders, yes, you could enter here. And the advantage of that is this. May as well bring this up and show you. If you use what I call the rule of one entry, you've got a much smaller stop loss. Then you can either go hit your target quicker or go for a larger target. Now of course, if you're trading the micro, you've only got $9 risk. Okay, so you can start off. I know new traders, what, I'm risking $90, $140 initially. No, you start on the micro and it builds both your confidence and your competence. Now what we've got, and there's a whole range of different time frames for different markets that we trade. For an example, we never trade the 2-1 on the NQ. It's far too fast. The 2-1 is fantastic for the Russell, for gold, for oil, for the Dow. So there's different time frames. And which time frame in the end also do you choose? Whichever is tradable. If the market's a lot faster, or very fast I should say, like the morning session, we can't even trade usually the 8-4. You've got to jump up to an even higher time frame again. So just here, let's just see, by the way, here whether I've got some divergence. And this is where trade, so I'm just trying to read what I've got here over here on the anchor chart. Yes, we do. So this is where learning how to trade in the direction of a higher time frame works, because what I've got just here is a really nice little, it's a little double top. I know it's out by a couple of ticks, looks like a duck, quacks like a duck, it's a duck. Look over on my anchor chart on the right here. See this is called a zero lag or a platinum MACD. See that little kink there, and see that here, this is called a 2D. When I got a 2D, I trade it down to the 89 EMA. Okay, nearly always you're going to come, and I won't go into why, but you'll nearly always come down to the 89. Now this is where, let's see whether this sets up, but this is where I want to show you why an anchor chart is so important. See on the entry chart here on the left, we had all of these red candles. See over here on the anchor chart 1, we've got all of these red candles. See over here, you had all these green candles. See, you have these little pullbacks. You've got some trade entries here, all in the direction of the existing trend. So over here with my super scalper, this is telling me right here I've got a potential long. I'm only going to go long if I have the anchor chart 1 on the right there gives me a red candle, and guess what, I don't get a red candle. And you can see the little giveaway just there, the Renko tail. So if we'd have taken that trade, we just would have been stopped on that trade. Now I can see on the right there I do have an entry with the anchor chart 1 candle closing, and for traders I call this a 3B. Members, you can see this is a 3B. Now when we take a trade, remember on that document I said we want to know where our pivots are. We've got two types of pivots just here. I've got also a 200 EMA, I've got a cam pivot, and I've got my traditional pivots. This is a confluence of support. So I've got a lot of support just here. Now what we want to do then is say, okay, we're going to get a bounce here possibly, and we look at where's our last prior swing high. See over here, see those black dots on my anchor chart 1? That's sort of telling me that, hey, this is a prior swing, maybe that's a good target. Now what I'm after, traders, as a scalper, I'm after 7 steps. Okay, my stop here is 2 ticks below just there. So typically you've got a 28 tick stop if you're waiting for your anchor chart 1. So let's see how we go here. 1, 2, whoops, that's not good. It's 1, 2, 3, 4, 5. Now I'm now at break even. 6, 7, there. We didn't quite touch 8, but we hit well and truly our 7 steps, so I would be out of that anyway. So I found that really the optimum is 5 to 7 steps if you're a scalper. Okay, 5 to 7, 5 to 7. I've just found that works really well, very high probability. Now what have I got just here? Now I'm only going to mention this to members here, okay, that are watching this. You've got a T10 right there on your anchor chart 1. You've got a T10. For the new traders or the members or people looking at becoming members here are watching my video, this is a very high probability setup, okay, and I call this a T10, also known as a ka-ching trade. Okay, so here we have an entry. Now with this one, this was trend following. That one there, by the way, was not. Okay, so that's a CT trade, counter trend. This is a change in trend, and that was with trend. So let me try to focus on for with trends, and there's another 7 steps. Now what's happened just here? Now I've got a new lower low in price. Guess what I'm going to look for? Let's see if we get a new lower high. Now just here I actually do have a lower high, but I don't have my white paint bar for a technical reason just here. But I am going to take this on the close of the 3rd candle at the latest, so we would be in. Now we've so anyway, look, I'll keep it simple here. So on the close of a 3rd candle, where's my stop go? 2 ticks above the high. What are we after? 7 steps. 1 2 3 4. Oops, not even 4. That was 3 4 5. Oops, not even 5. Now we've got you can see what's happening there. Maybe was that 5 6 7? There we go. So we got our 1 2 3 4 5 6. No, we've only hit plus 6. However, look over here, traders. What is that just there? We've got what we call a T12, a bounce on the 200. We would be out of that anyway. Let me just quickly, I'm going to show you another screenshot of something. I'm just going to pause this. I need to show you this so you understand this. So this was from a trading session the very next day, actually, where I was trading the RTY 10 lots here in the morning session, Globex session. See that black line? That is an EMA that represents my higher time frame EMA, and see how I'm bouncing right off there. Where's my stop go? 1 tick below. Remember, this is a lower time frame. This is only a 2 tick. So I've got a bounce right there. I now go over to this one just on the next page here, 5 trades 4 wins, and what have I got down here again? Another bounce. And the reason I want to show you that is that when we sell into a major EMA, let's close all of these. When we're selling into a major EMA, remember on that PowerPoint I showed you, and let's just pull that up again, where are your 89 and 200 EMAs? Why? Because of this very reason. We want to cover our trade or take profits. Okay, so we may have actually only picked up 5 steps at that stage. Now 5 steps, by the way, is $100. Remember your target, $350 after commissions. Now what have you now got right here? Now see how you had a green candle? We want to wait for a red candle to confirm the move, and we're after our 7 steps, so we would not be in there till down here. So 1 2 3 4 4 5, there we go. So now we've got our 7 steps. If we had have taken 5, which is 100, okay, you've got now another 5 or another 7 step move. Now as we pull back, we're expecting a bounce. Where this is called a fanning of the EMAs. When we've got a downtrend like this, we're expecting a bounce. So this is where you've got to be on the alert. As we pull back, here is another one. Now what you'd actually see initially is only a red candle like there. Okay, and these are the ones we call the rule of one. So if you've got a great trend, you can jump in. If you're a new trader, you're going to probably wait for your super scalper, so you're not going to be in until the third candle. And how far does that go? 1 2 3 4 5 6, another 7-step move after waiting for the super scalper. Now this is where we're getting very suspicious on this. Okay, why? Look over on the right here. Can you see that just there? Now we're gaining a lot of divergence. Okay, so I've pointed out the with trend trades. Okay, and now there's the reversal. Okay, so we came down a little further. So what I should have said here, with all that divergence here, I think that was up there, wasn't it? We had all of that divergence there. Now's the time for me to say, okay, look, I'm probably not going to take this trade here, even though 1 2 3, even though it would have been a 7-step move. This is a good one to perhaps sit out. I'd rather miss out on a winning trade than take a losing trade. When you're starting to get divergence, particularly on your higher time frames, now's the time to be very wary. And just in closing here, just here for members watching this, this is your classic T10, just there again. So you got a classic T10. Look over at my hull over here. So if ever I'm unsure about a move, okay, I look at what's my hull moving average telling me, and that's saying take these longs. But I've got to say here that we need to also consider, though, let me drag this down. I'm digressing a little bit now, but what's in front of us with any trade, we want to know what's in front of us. What we've got just here, traders, is what we've got: a downtrending 200 EMA, which usually means we'll get some sort of bounce just there. So we want to really cover our trades. So traders, for a new trader, if you're a new trader, this is what you want to be trading. Once we start to get these deeper pullbacks, higher highs and higher lows, okay, now's the time perhaps just to sit on your hands initially. You see, as I showed you just over here, you only need 4 5-step trades a day and you've hit your target. 5% return, or 3 7-step trades a day. So what are the best of the best setups? Okay, we're looking for what we call our 34s, our 2Bs, etc. Are we trading in the direction of the trend? Does the anchor chart confirm the trend? These are all really simple, straightforward rules. They're easy, but some traders will say, well, look, if it's that easy, why doesn't everyone make money from trading? Well, sometimes also the easy things are easy not to do as well. So for newer traders, you want to be trading with the trend initially. So look, I've gone well over time here, traders. Come and join me as a member. The links below, $197. And by the way, the spreadsheets that I showed you up here, you can actually download those as well. And I've got a little video showing you how to actually fill these out. That is, there's some rules you've got to follow to do it correctly. It's no good putting ridiculous figures in here. Yes, it'll give you these huge returns, but it's just not realistic. Okay, and remember too that I do have the bonus where you can come along and join me for 8 live or recorded sessions. Thank you, traders. See you in the next video.